We have seen stocks really pick up pretty phenomenally. It's been strong days for the NASDAQ, as I mentioned, but the Dow and the S&P both up for three times in a row, the last three sessions in a row. And the S&P is only about 2.5% from its all-time high at this point. Victoria, it sounds like you're a little concerned about where things have gone from here. You're a little cautious, just waiting to see what happens next with the economy. Is that a fair assessment?
I think that's fair, Becky, and we have to look at it from the sense of the demand and the consumption from consumers. We think that's really key in this environment, and so we have to wait and see what happens with this stimulus package. If we don't get some more unemployment insurance to help support those that have been furloughed or unemployed, then that demand question is really going to be key to see how the economy can move forward. Obviously, we have a handful of stocks that have really been driving this market, and that's all well and good to an extent, but we're missing that breadth that we started to see about a month ago. We're looking at stocks that are, surpassing their 20-day moving average. That percentage is really coming down. We're looking at earnings, and yes, they're beating when you look at the EPS numbers, but man, expectations had come down significantly from where we were before COVID. So we're a little bit concerned with the economy going forward from the demand side. We want to see that come back, and we think all of that's going to ride on what happens with the stimulus package.
Doug, it sounds like you're turning your eyes towards Washington, D.C. at this point, too.
Yeah, I think that's right, Becky. There's so much right now that is being driven by Washington. And look, I agree with Victoria. It's kind of a mixed picture in the short term. But the reality, though, is that, unfortunately, I think we are kind of preparing ourselves, or we should be preparing ourselves for what's probably going to be a more difficult environment going forward. I think almost everyone knows at a gut level that when you have the kind of stimulus that we've had, both monetary stimulus and fiscal stimulus, there are probably going to be unintended consequences down the road. And I'm quite confident that we're going to have to face those.
Are you anticipating, Doug, it sounds like you're kind of baking into your analysis that things will get worse with the pandemic from here, or is that not even part of the equation?
Look, I think that's a wild card for everyone. I don't think anyone has a crystal clear picture of exactly what path the virus is going to take. Obviously, we all hope there's going to be an effective treatment or a vaccine sooner rather than later. But unfortunately, the damage that's being done to the economy, and you don't see it as much in the S&P 500, but when you look at small businesses throughout the country and you think about the destruction that's being done and how difficult it's going to be to revive those businesses, essentially what's going to have to happen is that we're going to have to print even more money. And I'll give you a quick quote from one of your favorite guests over time. I was a gold analyst back in the day, about 20 years ago, and a quote from Alan Greenspan: "Deficit spending is simply a scheme for the hidden confiscation of wealth. Gold stands in the way of that insidious process." And so to me, as encouraging as it is that the equity market has bounced back as strongly as it has, both the bond market and gold and several other indicators are telling you that things are not quite right beneath the surface.
Victoria, I don't hear very many people coming on these days talking about election risk. Do you think there's any in the market? We're 90 days away from the election where you could have change, at least if you believe the polls.
No, I think you're right, Scott. The election risk is not really baked in at this point in time. And I think a lot of it is because the conversation that we're having now. The market is really moving on what's happening with COVID, what's happening with the vaccine, and how that's going to progress. I don't think people are as concerned when they look at what may happen in November and what would happen when you have either the current administration or a new administration in January. I don't think taxes are going to get hiked like people maybe anticipate in a normal year would happen if you have a new administration come in. I think they're less concerned about some of the regulation issues that they would be normally. You have such an overarching concern with COVID, and that's what's driving the market, that the election has actually taken a back seat at this point in time. We always have some kind of October surprise, so I'm not saying we won't have the election come more into play as we get closer to November. But at this point in time, the market is being completely driven by COVID. Powell said that in the FOMC meeting the other day, and I think that's where the risk is going to lie.